The AI boom is starting to crack, and Wall Street knows it. Something weird is happening in the markets right now. And if you've invested in stocks, especially anything to do with AI, buckle up because things might get messy. We're talking about prices shooting up like crazy, hype everywhere, and that feeling that somehow, this time, nothing can go wrong. And for those of you who haven't invested, you're still going to feel it. How, you might ask? Well, when these kinds of booms start to shake, it doesn't just hit investors. It hits jobs, prices, even the technology that runs your favorite apps and tools. You don't have to own a single stock for it to affect your life. Exactly. And if you want to stay ahead of every twist and every turn of your financial future, follow us on King's Coin for updates. It's been called the new gold rush, the biggest technological revolution since the internet. But now, people are starting to whisper something different. Is this really innovation, or is this just another bubble forming right in front of our eyes? Now, when I say bubble, I don't mean an actual company or a product. I mean a market bubble, a situation where prices get way higher than what they're really worth, mostly because of excitement and fear of missing out. It's like when everyone rushes to buy something just because everyone else is buying it. And when reality finally hits, when the money slows down or the profits don't match the hype, that's when the bubble pops. Prices crash, companies lose value, and it spreads out into the real world. And here's the thing. Even some of the biggest names on Wall Street are starting to sound nervous. Goldman Sachs CEO David Solomon recently warned that we could see a major drop in AI-related stocks. Jeff Bezos even called it an industrial bubble. And when guys like that, who usually stay calm, start choosing their words carefully, you pay attention. Over the past year, we've heard non-stop about how AI is transforming industries, creating millionaires overnight, and reshaping the future. Nvidia's stock exploded more than 180% in 12 months. Microsoft poured billions into OpenAI. Anthropic, Amazon, and Google are racing to outspend each other on AI infrastructure. But here in October 2025, that story is starting to shift. The same excitement that built this boom is starting to feel unstable. Here's what's really going on. AI stocks have been going vertical. Nvidia hit record highs almost every week this summer. Companies tied to data centers, chips, and machine learning are sitting at valuations that just don't make sense anymore. You've got startups with no profits, sometimes not even a real product yet, valued at billions. It's like the late 90s all over again, the dot-com bubble, but with AI instead of websites. Back then, companies just added .com to their names and investors threw money at them. No business plan, no profit, no problem. Because people believed the internet was going to change everything. And it did, just not for all of those companies. That same pattern is repeating. People believe AI will rewrite the world, and they're not wrong. It will. But not every company riding the AI wave is built to survive. And the reason this matters to you, whether you invest or not, is because when too much money piles into one place, it always finds a way to spill out. We're already seeing signs of it. Morgan Stanley just downgraded several AI-linked stocks, warning that their prices no longer reflect realistic growth expectations. Some of these companies are missing their earnings targets. The demand for data centers, which power AI, might not be endless like people thought. Even Nvidia's CEO, Jensen Huang, recently said that AI demand may be entering a new phase. That's basically the CEO's way of saying, things might be slowing down. And the big tech giants that have been spending billions on AI, analysts at JP Morgan and UBS say even they might start pulling back next year as costs rise faster than returns. Then there's debt. A lot of people don't realize how much borrowing is happening behind the scenes right now. But a lot of that lending doesn't come from regular banks. It comes from what's called private credit markets. It's called private credit markets. The Financial Times reported that private credit, basically shadow lending, has ballooned past $2 trillion globally, much of it tied to tech. It's not illegal, but it's risky because no one fully knows how big or how exposed that system really is. If these companies borrow too much and the profits don't show up soon, that's when things start cracking. That's how small tremors turn into big market shocks. And if that sounds familiar, well, that's pretty much what happened in 2008 with the housing crash. The details are different, but the story's the same. Too much debt, too much confidence, not enough reality. So here's the big question. Is this another bubble or just a growing pain before things calm down? Honestly, no one knows. And that's the scary part. Because every time we say, no, this time it's different, history usually proves us wrong. Think about crypto. Remember when Bitcoin hit 19,000 back in 2017 and everyone thought they were getting rich? A year later, it all collapsed. The technology didn't go away, but the hype did. And when the hype disappears, only the strong survive. Every big financial cycle starts the same way. Real innovation, real excitement, then greed sneaks in, prices explode, logic disappears, and before you know it, everyone's chasing a dream instead of a plan. And right now, that's exactly what AI looks like. But here's the thing, it's not all bad. AI is real. The tech is incredible. Hospitals are using it to save lives. Businesses are cutting costs, automating work, and creating new opportunities. That's not hype, that's real change. The problem isn't AI itself, it's how fast the money around it is moving. When investors start to believe something will always go up, that's when danger sneaks in. Some investors I follow, like Cathie Wood, who famously rode the tech boom and bust cycles, are already quietly trimming profits, diversifying, and holding more cash. They're stepping back before the fire gets too close. And I get it because I felt that same tension, that mix of excitement and unease. You see everyone getting rich and you start thinking, maybe I should just buy some Nvidia and forget about it. But then you look at how crazy the numbers are and you start to wonder if you're walking into a trap. It's human nature. We all do it. Greed is contagious, but so is fear. Every bubble follows the same emotional pattern. It starts with optimism, turns into pure euphoria, then denial, and finally, panic. And right now, we're somewhere between euphoria and denial. That awkward stage where everyone knows something feels off, but no one wants to say it out loud. So maybe the truth is somewhere in the middle. Maybe AI is a long-term revolution, but the short-term hype has just gotten ahead of itself. Maybe the next correction won't be the end, just a reality check, a reminder that markets still obey gravity. Because no matter how fast the tech grows, profits still matter, earnings still matter. And I think that's what's happening right now. It's not fear, it's fatigue. People are finally looking at the numbers and saying, all right, maybe we've gone too far, too fast. The bigger issue is how crowded this trade has become. Too many people chasing the same few companies. And when everyone's packed into the same room, it only takes one spark to make everyone rush for the exit. We've seen it before, in 2000, in 2008, and we might be seeing the first signs of it now. So what do you do with all this? Well, I'm not your financial advisor. I'm just a guy trying to make sense of the madness, same as you. But here's my honest take. Stay curious, but stay cautious. Don't chase hype, don't panic. Watch what the quiet money does, not what the loud money says. Because in the long run, the people who keep their heads while everyone else is chasing the dream, they're the ones who win. This is King's Coin. Thanks for watching, thanks for listening, and if this helped you make sense of the noise, you already know what to do. Subscribe, stay alert, and I'll see you in the next one.